No pressure.
Healthcare Affordability,
No pressure.
Rethinking and Redesigning Financing will be presented by our distinguished speaker, Mr. Ranjit Singh, CEO of Emden Capital. So let me introduce the background of our speaker. Mr. Ranjit Singh is the CEO of Emden Capital, is at the forefront of revolutionizing medical financing across Southeast Asia. Under his leadership, Emden Capital has become a pioneering provider of both conventional and Sharia-compliant financial solutions, making quality healthcare more accessible. His strategic vision has fostered partnership with renowned healthcare institutions, expanding financial accessibility for both essential and elective treatments. Recognizing this commitment to innovation, Global Health Asia Pacific honored Emden Capital with the Healthcare Financing Service of the Year Award 2024 for Malaysia, further cementing its industry leadership. So without further ado, ladies and gentlemen, welcome Sir Ranjit Singh on the stage.
Thank you. Okay. Stay there, will you? Where's my mic? I'd rather hold the mic. Can I? Okay. So, thank you for the introduction. So, we need to wake people up. We know after me also, you know. My pointer sana. Pointer mana? Yang
Yeah, this the laser is right. Laser no, this one. No. This one. The red color. You push the red color.
okay. Okay, done. Good morning, ladies and gentlemen. I'm Ranjit. Thank you for having me. Comfori, thank you for the invite. Okay. Now, the topic that I'll be speaking on today is healthcare affordability, rethinking, redefining, restructuring financing for healthcare. If we look at it, but before I start, my background a bit. I've got about 35 years in banking and finance. I started my career with Arab Nation Merchant Bank at the tender age of 20, very fresh. Under Tan Sri Azman Hashim, then I moved on to MAA, the investment division under Tunku Yaakob. So under Tunku Yaakob, I was taught a lot of things, including there's a difference between guidelines and the law. So we did a lot of things according to guidelines, and that really opened up my mind to what I've become today. And from then, I moved on to Deutsche Bank, mainly global banking, and I left Deutsche in '99. I set up my first institution in 2002, focusing in consumer financing, where we catered to mainly the top 20% segment of the population, the white collar, giving them preferred financing options. This was still not medical related yet. In 2004, we set up Emden Capital doing the same. Again, dedicated financing, right? Consumer financing. So fast forward 2014, we started at Emden. We started receiving a lot of applications that were related to medical. And when my team started going through the applications, we realized this is in correlation with doctors. Doctors are very active on Instagram. So they started to advertise, and we saw the rise in medical related, but it was mainly for aesthetics at that time, so electives. And this went on. The numbers kept on rising um, until the next thing that triggered was in 2017. We saw the introduction of co-payment. It could have happened before that. That we're not very sure, but that's when we realized it. So the following year, I got my whole team to go down and do fact finding. Why is this happening, right? Why is this need not being met by other institutions? Um, so the reason of co-payment I'll highlight shortly. Um, so the team went for about 2 years. They were doing fact finding, and one very simple. I remember the report. The report is one-page report from my team, and it says that they said the medical fraternity and the FIs, the financial institutions, were not communicating. Both was feel they're important in their own place. So we made a decision, not a very difficult decision, to transform Amden to become the only dedicated medical financing provider in the whole of Southeast Asia, and we took advantage of COVID. We made the transition. Mm, we did our first disbursement in the fourth quarter of 2021, towards the end of COVID, and that was also an elective for bariatric surgery. Now, we are known name in the industry for bariatric surgery financing. Most of bariatric surgery cases that require financing, I would say about 65 to 70% of those comes through Amden Capital. Right? We also do a lot of, of course, we do a lot of other procedures. We cover electives, non-electives, which I'll touch on later. So from then till the second quarter of 25 is what we call our incubation period, right? Which means that we've done, in a very controlled environment, we've done 500 disbursements and we've got 0 NPL. Now, the reason I'm telling you this is because it's relevant to what I'm going to touch on later. So it's good for you to know the flow of things. Okay? We are also currently in talks with Myanmar and Indonesia in facilitating the same business down there. Okay, and also we got another program called DHIP, which is a doctor healthcare investor platform, which I'll touch on later as well. Now, is Malaysian public healthcare sustainable? I think we all know the answer to that. It's definitely no. You cannot afford 1 ringgit and 5 ringgit treatment at current rates, right? A bit of history. Where did this universal healthcare start? It started in the UK. It started right during World War II, okay, when things were decimated, and they felt that after a tough time during war, everyone needed universal healthcare, which is free, basically from cradle to grave. Okay, they wanted to take care of their people. They said, our people have been through enough sufferings, so now it's time for us to take care of our people, right? And so it went on. It was launched in 1948, and when Margaret Thatcher came, she decided, because it was taking too much of their budget, so she decided, she had the political will. We needed a woman to decide enough is enough, okay, and we can't absorb this cost anymore. The government just can't sustain this. So she revamped the whole of NHS. And but in Malaysia, we're still doing the same thing. We don't have the political will to change, right? And the outcome is like now what we're facing lah. You can stop me anytime and ask me a question, sir. Now, private healthcare cost drivers. We were in Phuket last year when we attended a medical conference and awards. And what I what we found out about setting up a hospital shocked me. From the time hospital, from the time they acquire land till the time they get full approval to start development, start construction, is 800 days. So immediately the banker in me kicked in. I started to think financing costs. It's first of all you buy the land, you don't take you don't get 90% margin, right? You get about land 60 65% max, and then you hold that, you take a loan for the rest. You hold that for about 2.5 years before you start construction, and that goes on another 2 years, and then you equip the hospital, and then you get CCAPs. So that what, 3.5 years? So that is how long you have to hold and bear the cost of it, and that's a lot of money. Okay. Then comes equipment, disposable supplies, drugs, and staffing is a big chunk of operations. So equipment, disposable, and drugs is all purchased in US dollars. I'll come to this later as well. My topic of discussion is not as interesting as Dr. Sarah or Dr. Sri Vincent, but it's a bit dry, but it's relevant. Now, you'll be wondering why is currency depreciation being mentioned in healthcare affordability, right? If you look at 2012, we were below 3 ringgit against one US dollar. And in February of 24, we were almost 480 against, this is not even intraday, this is closing. Intraday we crossed 480. Intraday meaning that means within the trading period. Okay. So from this is a better explanation. I will do a comparison. An MRI machine is just one of the equipment that the hospital buys, right? We buy a whole lot of things. So if in 2012 we bought an MRI machine for 1 million, it will cost the hospital $3 million, right? Now, if in 2024 we buy, of course, equipment cost has gone up even in US dollars. Dr. Sarah, do you agree? Yeah? I mean, I think going up by 100% is a bit conservative. It's gone more than that. So I'm just being conservative here. So from 2 million, you times 4.8, which is the currency exchange at 2024, right? It costs you 9.6 million, which is a 220% increase. So how would a private facility cope with this? They've got no choice to stay afloat, to stay sustainable. They had to do transfer of pricing. So that is when you hear politicians harp on things like a glove costs you 8 ringgit, 10 ringgit. That is how they stayed afloat. Okay, they had no other choice but to do that, because in Malaysia, KKM regulates doctors' fees, and it's not changed very much over the last few decades. Okay, unless in like neighboring countries, doctors' fees are not so heavily regulated. There's still some flexibility. Now, this, of course, all of this leads to medical inflation. Right? The weak currency leads to increase in price, as we saw. For hospitals to absorb costs, they have to do transfer of pricing. Now, it's also led to a rise in out-of-pocket expenses. As at 2023, the OOPE, out-of-pocket expenses, was close to about 30 billion ringgit, and we estimate it's going up by about 5% a year, being conservative again. We think it's higher than that. Now, the OOPE rise is compounded by the fact that Malaysia is a rapidly aging population. I'm 55. Another 5 years, I'll get discounted train rides. Okay, so I naik kereta api, naik LRT, I'll get a discount, most likely lah. Okay, Now, not only will I get that, I also probably have other ailments, probably knee pain, etc. Okay. Now, my organization, Emden Cares, I live in this where I live, right? My community, when I bought my house about 20 years back, I was 35. So when I bought the house down there, this is in Damansara Kim, next to KPJ1, Dr. Sarah. Um, when I bought the house down there, I was the youngest homeowner in that area. Most of them were 55, 60 years old. So now most of them are in their 70s to 80s. And this is when all your issues starts, right? Your knee pain, your back pain, etc., your heart issues. And once you hit 70, you are not covered by insurance, definitely. Okay. And most Malaysians are reliant on employer insurance as well. So once employer insurance habis, once you finish working, you've got nowhere to go, right? Then it's out of pocket, right? So all this adds to a steep increase in out of pocket expenses. Um, the broken chain theory. I I keep on speaking of this in the office like a broken record. So I mention this every single time until my partnership manager Emma said, "Boss, why don't I interview you about this?" So when we were in Bangkok uh, for another healthcare conference, um, Emma did an interview. She gave me the questions which I was supposed to go on the plane, but being a typical how I was as a student, never did homework. I didn't go through the questions. If you are on our social media, you can hear the interview. You can do a search on me. Now, basically, is this: the hospital, for as good as you are, for as good as your facility is, as good as the equipment you have, the expertise, the doctors, right? If there is no affordability, it's pointless. So the key affordability is key in making treatment possible, right? Now, again, traditional healthcare financing, we all hear medical inflation, we hear insurance premiums going up by about 200%, and I think Bank Negara is regulators for the banks, the FIs, non-FIs, as well as the insurance side. Okay, so Bank Negara has been working very hard to see how they can solve the problem. Now, it's a difficult situation to be in because the whole issue stems from a very weak currency. If you look at it, 2012 we were at 3 ringgit, we were at 480 in 2024. Now, what does that tell you, right? And then COVID hit. We were the worst performing currency in Southeast Asia. Now, even Singapore, who's got a very stable currency, even they are feeling the heat of medical inflation. Okay, so for private hospitals to be able to cope, they've done amazing lah. Yeah. So traditional healthcare financing, again, uh, medical card. In the about a decade ago, if you had a medical card, you walk into the hospital, you show your card, you have got no worries, right? You're fully covered. Now you got co-payment, and then you got exclusions in your medical bill, right? Because hospitals don't cover a lot of things, and GL is not so easily given by insurance companies. A lot of factors related to that, compounded by the fact of declining employer medical benefits. A lot of big corporations, GLCs, MNCs, PLCs, have reduced their medical benefit, some drastically, right? Um, come in TPAs, third-party administrators, they squeeze the margin even more. So when the patient goes to the hospital, a lot of things are not covered. A lot of treatments are excluded. the amount, let's say you used to get unlimited coverage, now you can claim up to 50,000 a year for you. How about your family members? So all this is to be considered when we are talking about affordability. COVID was a very good teacher. Um, you most of us remember COVID. What do you remember about COVID? Where were you working? Your name? Erna kerja mana dulu?
Instant Medical Center under MO.
Okay, MO. Mana?
Instant Bay.
Okay. So you were in private.
Yes.
So masa COVID, ingat tak? We all withdrew. I mean, most of you all withdrew. Yeah, and from EPF account tu kan, right? And then those who were doing online sales went up, right? So COVID created a very artificial market during that time. Okay, we didn't realize, for those of us who are working, um, those of you all who are working, you had account to fall back on and withdraw your money. You could withdraw 3 times, I think, right? That led to a depletion in account two. Okay, um, it also created a false sense of financial security, because you, for those who are working, who got their salaries on time, and then you had the liberty of withdrawing money from account to, wow, you like raja lah kan. You really enjoyed whatever you want to buy online, and online sales really picked up. So that's the reason why online sales picked up during COVID. So it created a false sense of security for a lot of people, right? Now, what we many didn't realize is it also led to a dwindling of, or almost wiping out, the whole of EPF account too, right? So now at Emden, when we do financing, okay, there are certain procedures like bariatric surgery financing, or electives that EPF allows withdrawal from account to. And usually we tell our clients, look, instead of taking the full loan financing, why don't you look at your account too? And when we look at their EPF statements, there's nothing much left inside there. So COVID has had that negative impact on a lot of people. And I think one suggestion by the health minister is to take some insurance from EPF account too, I think, which is when you have got nothing much down there, where do you take it from? So that's the data that we see, that's the data that we see, that the health ministry doesn't see, or the administrator being the government don't really see. Things on the ground level are totally different, right? Am I going too fast? You want me to slow down? Make sense to you guys? Thank you. Okay, now our experience, like what we finance and how. When we first started, we did a lot of elective procedures. Like I said, our first financing was bariatric surgery financing, simply because I was morbidly obese at that time. So it's close to my heart. I mean, I didn't go for bariatric surgery. I was 135 kilos then. I lost weight on my own. But I know the pains and the sufferings of a morbidly obese person. So that's the first procedure we finance. Then from about end of 22, a lot of non-elective procedures started coming in. We started to finance pacemakers, we started to finance implants, many non-elective procedures. And 23 was a different ball game altogether. That's when insurance companies started to say a lot of procedures won't be covered fully. So we did a bridging as well, right? Another way of bridging was, for example, if someone does TKR, total knee replacement, if you do normal surgery is 24,000, robotics is 36,000. So we finance the bridging. We finance the differential sum. That's called bridging. And We also realized during that period, that end of 23, many hospitals were losing their panelship with insurance companies, right? Because the cashless facility is not an obligation of an insurance company. Okay, the obligation of an insurance company is to provide coverage. So no GL is issued, you go, you get your treatment, you pay, you come back, you claim. So that's when our financing was, it was actually much needed. So we are seeing more of that right now. A lot of hospitals have been removed from panel of insurance companies. A lot of exclusions, GLs are not freely being issued. So at Emden, we are becoming more and more relevant in that. So hence the yeah. Okay, can I continue? Thank you. So hence the relevance of Emden Capital. Yeah. Now, in every crisis lies an opportunity. We hear this very often, right? Um, this is an opportunity for us to evolve, for us to do better, for us to think on how we can craft, or we can actually be different, right? We can structure things differently. So besides being an outright financing provider doing medical financing, uh, Emden Cap has been approached by cooperatives, by sovereign wealth funds, family offices, governments, and MNCs. Cooperatives simply because, for those who know cooperasi, especially government servants, I think you all are very familiar now cooperasi. So cooperatives have got a huge number, they've got a huge database, and they've got a lot of cash sitting up as well. But they do traditional financing. They do mainly a want-based financing. Emden Cap is different. We do a need-based financing, right? Healthcare is a necessity, so it's a need for it, right? So I think they want to improve their image, so they're coming to us and requesting that we be a facilitator. We do a transfer of knowledge to them, and we manage the back end for them. It's exactly what I used to do in Deutsche Bank. So we're doing this something similar. In Deutsche, we were in global banking. We used to manage the back end for fund managers like Morgan Grenfell, Deutsche London, New York, etc. So we made them look good, but the work was actually done, everything was done behind the scenes. So we're going to do the same thing with cooperatives. 20 minutes, thank you. We're going to do the same thing with cooperatives as well. Sovereign wealth funds, for those of you who know what it is, you know Khazanah? Now Khazanah is a sovereign wealth fund. So we were not approached by Khazanah. As always, Malaysian companies are noticed by different countries. So we've been approached by a different wealth fund, a different sovereign wealth fund, and it's the initial contact, and we are asking for a RFP, request for proposal, and seeing how we can work with them, right? Family offices are those with a lot of money. They want to go into ESG. Basically, they look at us as a social enterprise. So they're keen to invest with companies like us. Now, governments, I think what we're doing is very specialized. So medical inflation is not just an issue in Malaysia. Of course, Malaysia is compounded by the fact of our currency depreciation, right? So it's an issue across the globe, and it's very relevant prevalent in Southeast Asia. So we've been tapped on to share our expertise for this as well. Besides this, we will be doing a facilitation exercise with a lot of companies, GLCs, MNCs, etc. Now, The role of administrators, regulators, and facilitators. Uh, Amden is a facilitator. Um, the best ideas often come from outside the industry. To give you an example, I'm a banker of what, 35 years. So my staff, our team, the whole team is looking at financing every single day. So every approach that we have, we look at it as financiers. It's what we do in Amden is totally different. When there is an issue, we get input from outside the industry. So, for example, sometimes I sit with F&B operators, right? How can we do things differently? We give them a scenario, and then they tell us, okay, look at certain approach, use a certain approach, because we are very people-based business. So you have to get a different approach to see things differently. Otherwise, you're so used to doing things your way that whatever flaws is you can't notice it. Like the pepatah lah no. Apa ni kuman di luar nampak, gajah di bibir tak nampak kan. So same thing, you can't see your own flaws, right? You can't see the problems within your organization. So it's we get this thing from outside. When I gave a talk last year at pharma conference, I mentioned this again. For the industry to evolve, the regulators should tone down a bit. There should be a bit more flexibility given. The regulators should also take a role of advisory as advisors. So you don't come from a point of authority, but you come from a point of advisors, right? So we suggested a joint regulator advisor model involving all the relevant parties. Administrator, again, being the government, of course, KKM, hospitals, the insurance sector has to realize that things are not rosy as earlier, and MOF, Bank Negara, and healthcare financiers. So, in any role for any industry to evolve, you need equality. You cannot be based on an authoritarian rule. You don't allow when any industry is over-regulated. What happens is creativity is killed. Okay, so we need that. We need to evolve. The point of this is that the traditional financing for healthcare has been insurance, right? And we noticed this in 2017 with the introduction of co-payment, correct? So that's when we realized that model will not be sustainable. And now it's undeniable that it is totally not sustainable. So there has to be a joint effort among all these parties involved, okay, to come up with a product that can be sustainable long term. If you look at the chameleon, this is a very amazing creature. Okay, if you're wondering why am I putting this, this is not related to nature, right? You look at the chameleon, the traits like rotating eyes, it says continuous vigilance. That means with the changes happening in the industry, we need to be aware of what's happening. Okay, what this does to us is it's not app sensing, it's depth sensing actually. Okay, so we need to understand how bad, how serious the issue is. So second thing is rapid precise prey capture. Of course, we're not going to capture prey down here. That means it's for us to seize an opportunity. In this case, I think is to seize an opportunity for us to evolve, to be different, to do things differently, to create different products, to meet the needs, right? To be creative in that sense. Hence, even in financing, which is, like I mentioned earlier, the broken chain theory, you have to be creative. The insurance model doesn't fit all. Okay, gone are the days where the insurance dictates what private hospital says or do. That shouldn't be allowed to happen. You're there to provide a service, you're there to provide coverage, you stick to what you do. Agile movement, again, is very, like I said, we have to be flexible. So, for all my years in corporate, what I realized is that whether I was in Merchant, MA Investment, or Deutsche, corporates had a lot of red tape. So for any decision to be made, you have to get a lot of layers of approval. So when I moved out of corporate, I did not want the same thing to be done in my organization. So we've got open lines of communication. You think there is a product that you want to propose? Come, let's sit. We make a decision in an hour and we move. The person who proposes gets all the support, create the product, let's move. I think that is what is holding back a lot of even hospitals. Of course, government you kena dapatkan kelulusan, a lot, it's layers and layers of kelulusan, right? So it holds that by the time you implement something, it's obsolete. So I think this adaptability is, this creature is really adaptable. The same way, healthcare financing should be rethought, redesigned, and most importantly, adaptable. You know, you can't be saying insurance is a way, it's a Bible for you to go to. No, no longer that. So there has to be really. First of all, we have to acknowledge the issue, which we all have, right? Let the professionals deal with this issue in a much better manner. We should take responsibility of the issue, and then we see it as an opportunity to evolve. When we started when we started medical financing, when I did my fact finding in 2018, I got in touch with my colleagues from Deutsche Bank regionally, and we were told no one was doing this. So it's very odd because when you do financing, personal financing is different. Healthcare is actually emotional financing, and it's a basic need. So we are wondering why not, right? Why wasn't this need being met? So we made the decision to go into it, and it was a good decision. Now that we've known, not only domestically but also abroad, so it says a lot. It says there's a huge demand for what we're doing, right? Again, back to collaboration between administrators, the government, regulators, private healthcare. Private healthcare meaning, of course, hospitals, and healthcare financiers. Traditionally, when you mention healthcare financiers, insurance, now it includes boutique healthcare financiers like Amden Capital. So I think it's time that we sit, and the public has to be fully aware of the issues, the currency depreciation, the reason of the actual reason of medical inflation, right? We educate the public in a proper manner without politicians jumping on a bandwagon. You get the health ministry, you get MOF, you get Bank Negara, you get health financiers to come up and you educate the public. The public will understand you. That is the end of my talk today. Any questions?